Welcome to TradeTheMBI.com. This is John. This report is for the 8th. Got a little bit of the contract rollover. We can see up here that we've moved to the December contract, and so that caused a little bit of upheaval throughout the day. I mean, it pretty much finished flat. We're getting a little bit of a retrace in there. It was kind of weak because when you split the volumes between contracts, as you try and roll over into the other one, there's inevitably a little bit of movement in both directions in order to get an equilibrium. But we're pretty much back where we were to start off with it. I mean, there's really just no impetus or strength. I mean, we got the dollar getting hammered pretty much around the world simply because, well, you don't have the threat of the debt deal and these kinds of things. And of course, they'll all tell you that it's Gary Cohen not getting a nod to the Fed chair that's caused the market to dump. All a bunch of baloney. We've been pretty much in a soft period right here and getting weaker, and that began right up here at the peaks. So none of that's changed. We're not oversold from the extreme standpoint down here. There's just no real impetus to make any moves at this particular point. So you get what you get. NQ holding up much better. We talked about that. The strength, the readings also in the DOC much stronger at the higher elevation of the ranges here, not even down to the 13.5 where the ES is already well below it. The euro is definitely still skyrocketing, and that is definitely going to put strength into the U.S. market with the exchange rate. Certainly helps S&P companies. It's not doing a whole lot for them, but it certainly makes U.S. goods more attractive, and that helps in general. The crazy trade here, new highs for treasuries. This is ridiculous. You're buying into that. I mean, you have three positive extremes right there. We had the short signal. Nothing of that's changed. The only difference was that right after the short signal, you ended up with cyan below red, which flipped it back into a bullish category, and you haven't seen steel dip below cyan. I think if you saw that happen, then you would expect a much deeper decline. Could happen at any time. I think that the dollar devaluation is going to force at some point the Fed to decide whether they're going to back the dollar or not, and if they do back the dollar, that's going to have to be through rising rates, and that's how inflation will return to the markets when that is forced. And there was always talk of that, but the question was always the amount of slack in demand. And to a certain point, once you increase rates, all of this electronic money that's been created will start to actually flow into real existence, and that will become an interesting dynamic because that will be the fuel for inflation. Two, also, any of Trump's policies that limit foreign competition, reduce the opportunities for visas and things like that to force hiring of Americans at higher wages certainly will have a dramatic impact. And wage increases are really going to be the driving force, with energy pretty much kept under taps now with the release of the shale potential. Now you're going to be looking at labor wages as the next driver of any inflation. Some people would say, well, that's counter to why gold should be rising. Well, there's a lot of other systemic risks, and the fact that in general gold is way undervalued given the amount of currency that exists out there. Whether you call it electronic or not, it hasn't materialized yet, is why it's taken so long for any reaction to gold. But at the end of the day, that eventually will get realized, and when it does, this will be significantly higher. Even from this point, could double without any trouble. And here we have the 5K. You can see, look at how small. I mean, let's just shrink this chart just 1 second and get a relative comparative. So this is a typical day from the little white line. The little white line, you can see that at a normal day's volume, and then boom, the country grow. I mean, that's a huge compaction. It is interesting with this ABM adjustment here, where you get the numbers come in that finally give you, and this number 7 in this particular case is the final buy. That came in right about here before we ended up with the nice rally that took us all the way back to the highs. And of course, in the post-market, they just brought it right back down in the spike. And let's see the steel coming below cyan right there. And then it triggers it all the way down. And this just refilled the bottom. We have this dip below the red line back over here, which suggests that we need to come all the way down to the 0.24. 55, but again, very tiny in the volumes category, and that should start to change by midday later today, then we should be pretty comfortable with the readings that we're getting, and that should all be completed. Since the rollover isn't really effective until next week, but they get an early start on it. And still in the U contract, won't flip over for another day or two. So that's where things are at currently. I wouldn't expect too much excitement that Daly's not giving us any real impetus. We could look at a 50K chart. Let's pull one of those up. 50K from right over here. Pretty much flat. I mean, we ended up with a nice little signal that started on the retrace here, but it's pretty much petering out. Didn't quite get above the 13.5 like it did back over here when we reached the peak levels from the initial rally that happened right there. You see all these sevens right now. That's just an indication that it was staying within the trend of it. All you're going to get will be a color signal. It'll be a little behind some of the MBI games that we used to have, and that's just going to be a function because it requires so many extra conditions to be met to make sure we're getting a forceful rally as opposed to a lot of just a lot of signals. The idea is to avoid a lot of signals and have more trend-related moves, which is the ideal situation, and that's also what the fib level retrace provides for as far as retrace expectations and that. So the idea to be able to use the small time charts to trade in longer time frames using the fib level retrace is ultimately the goal there. As always, though, look for me on the Skype chat. Yesterday was out a little bit at the end of the day for the Riva Colonna here in Italy, the Festival of Lanterns. So that was kind of fun. It did rain a little bit, but yeah, cleared up just in time. As always, though, trade well. We'll talk to you later.